All right, so we're diving deep today,
Sounds fun.
yeah, into these magnificent stocks for 2025
Uh-huh.
that an article from the Blue Money is pinpointing.
Okay.
And this is especially interesting, I think, considering 2024
Yeah.
was such a banner year,
For
with
sure.
the Dow Jones, the
Yeah.
S&P 500,
Right.
and the NASDAQ all hitting record highs.
Yeah, the market's
Yeah.
buzzing, I think, even with some economic uncertainties kind
Yeah.
of on the horizon. It's like everyone's expecting
Yeah.
this bull market to just keep charging ahead.
Yeah, and while past performance isn't a crystal ball,
Right.
this article claims that these 7 stocks could double your money in 2025.
Wow.
Of course, these are high-risk, high-reward picks.
Yeah.
So informed decision-making is absolutely key.
Mm-hmm.
So I guess before we jump in, would you say it's fair to categorize these picks as more speculative than your average blue-chip stock?
Absolutely. These aren't your
Yeah.
set it and forget it type investments. You really have to be thinking about your risk tolerance
Uh-huh.
and really kind of keeping an eye on market developments.
Okay, cool. So let's unpack the first pick then. We'll start with NIO,
Okay.
which is a Chinese EV manufacturer that's been generating quite a bit of buzz.
Yeah.
Um, they've had their ups and downs,
Yeah.
but their production numbers are really turning heads.
Yeah.
I mean, a 34% increase in production through the first 11 months of 2024
Yeah.
is nothing to sneeze at,
That's for sure.
especially considering all of the supply chain issues that have plagued
Right.
other EV makers.
Well, what's really interesting is that they're achieving this growth
Yeah.
despite some economic slowdowns in China.
Right.
They're consistently producing about 20,000 EVs a month.
Wow.
And they have these ambitious plans to double that number
Really?
by expanding into new markets.
That's right. They're launching the Envo brand in Europe,
Yeah.
which is targeting a more mid-range price point,
Uh-huh.
and then the Firefly brand in China, which will be a compact and presumably more affordable EV.
Right, kind of covering all their bases.
Yeah, it seems like they're trying to hit all the different categories and price points.
Exactly, and appeal to a wider range of consumers.
Yeah.
And let's not forget their innovative battery swap technology.
Yeah.
And this is something that really
Yeah.
sets them apart, I think. They have over 2,800 battery swap stations across China,
Wow.
offering a convenient alternative to traditional charging.
Now, that is something that sets them apart. I mean,
Yeah.
imagine just swapping out a depleted battery
Yeah.
for a fully charged one in minutes.
Yeah, just a couple minutes.
Potential game changer.
It is. I think it could totally alleviate range anxiety
Yeah.
for EV drivers.
For sure.
And then from a business perspective,
Yeah.
that battery swap technology could generate significant high-margin service revenue for NIO.
Right.
So it's adding another dimension
Yeah.
to their business model.
So NIO is definitely one to watch, especially if they can successfully execute their expansion plans
Right.
and really leverage that
Yeah.
unique battery swap technology.
Totally.
All right, let's shift gears now and look at Pubmatic.
Okay.
They're an ad tech company, and the article suggests that they could really take off if the U.S. economy continues to grow.
Right, because ad spending is so closely tied
Yeah.
to economic performance.
Right.
And, while there are always concerns,
Uh-huh.
the U.S. economy has historically demonstrated,
Yeah.
this resilience and this tendency to expand.
Uh-huh.
So if that continues, ad spending should benefit.
Right. And Pubmatic is in kind of a sweet spot
Yeah.
within the digital advertising space, a sector that's rapidly outpacing
Huh.
traditional forms of advertising.
Absolutely.
What I found particularly interesting about them
Yeah.
is that they've made this strategic decision to build their own cloud-based platform.
Mm.
A lot of companies rely on Google or Amazon for that,
Yeah.
but Pubmatic has chosen to go it alone.
Well, and that's a key differentiator, I think,
Yeah.
because by controlling their own platform,
Uh-huh.
they're avoiding the fees and the limitations that
Right.
come with relying on third-party providers.
Right.
So they can scale their business more efficiently
Mm.
and retain a greater share of the revenue that they generate.
So they control their own destiny,
Yeah,
in a sense.
for sure.
And speaking of control, their financials look pretty solid, too.
Okay.
They've got cash reserves representing 20% of their market cap,
Mm-hmm.
and their forward PE ratio is only 17,
Wow.
which is considered quite low given their projected growth.
Okay.
Can you just, for our listeners, explain what a forward PE ratio is
Yeah.
and why that's significant?
Sure. So the price to earnings ratio, or PE ratio,
Yeah.
is a valuation metric that compares a company's stock price
Okay.
to its earnings per share.
Okay.
And the forward PE specifically uses projected future earnings.
Got it.
A lower PE ratio generally suggests that a company is undervalued relative to its expected earnings.
So in Pubmatic's case, that low forward PE ratio indicates that the market might be underestimating their future earnings potential.
Exactly.
Which makes them look like a potential bargain.
Yeah.
Especially if their bet on digital advertising and their own platform pays off.
Right.
Okay, now let's talk about Cloudflare.
Okay.
An AI-driven cloud services provider that's got Wall Street buzzing. They have a pretty hefty valuation.
Right.
But the excitement surrounding AI is fueling those expectations for explosive growth.
There's no doubt that AI is one of the hottest investment themes right now.
Right.
But, it's important to remember that these emerging technologies often experience these hype cycles. And there's always a risk of a bubble bursting.
Of course.
But even with that risk, I think Cloudflare is a company worth paying attention to.
Right, because even if the AI bubble bursts, Cloudflare provides those essential services that businesses need regardless of that hype cycle.
Exactly.
Their Cloudflare One platform, for example, helps businesses securely transition to cloud computing, which is a trend that's only going to accelerate.
Right. They're not just betting on AI. They're providing that infrastructure that businesses need to operate in a rapidly changing digital landscape.
Yeah. And their client base is pretty impressive.
Yeah.
They've seen a 71% increase in clients.
Wow.
Generating over $100,000 in annual revenue.
That's great.
So that's a clear indication that large businesses are putting their trust in Cloudflare.
It is, and that trust is reflected in their strong financials as well.
Yeah, they have a 79% adjusted gross margin.
Yeah.
Which basically means they're keeping a large chunk of their revenue after accounting for the direct costs of providing their services.
Right, so they're not just growing, they're growing profitably.
Exactly.
And then their potential role in supporting AI through edge computing with their workers' AI platform could further boost their growth. So they're enabling businesses to run these machine learning models within the Cloudflare network, bringing AI closer to the data source.
So they're essentially positioning themselves as a key player in the AI ecosystem.
Yes.
I mean, their projected sales growth of 26% might just be the tip of the iceberg if they can capitalize on this AI opportunity.
Right.
Okay, let's move on to a company that's riding a different kind of wave.
Okay.
Aspen Aerogels, a provider of electrification and energy sustainability solutions.
Yeah.
They seem to be perfectly positioned to benefit from the EV revolution, even with those potential political shifts on the horizon.
I mean, the incoming administration might impact clean energy investments.
Right.
But Aspen's core product, PyroThin, is this critical component in enhancing lithium-ion battery performance in EVs.
Okay.
So it helps to extend the range of these vehicles, which is a major factor for consumers considering an EV purchase.
Absolutely. And it's not just hyper, their revenue growth, especially in their thermal barrier segment, has been remarkable.
Yeah.
I mean, they've just blown past their initial projections.
Right. And they're not just growing.
Yeah.
They're also becoming profitable.
Yeah. And that they achieved this profitability through a combination of cost-cutting measures and margin improvements.
Right.
So they've managed to navigate a challenging economic environment.
Yeah.
And emerge as a leaner and more efficient operation. So they're not just riding the EV waves, they're paddling hard and making smart decisions.
I love that analogy.
Yeah, their story is a great example of how companies can adapt and thrive, even amidst uncertainty.
Absolutely. They've demonstrated this combination of innovative technology, a focus on efficiency, and an ability to adapt to market dynamics.
Right.
These are all qualities that investors look for in a company, especially in a sector as dynamic as clean energy.
For sure.
Yeah.
Okay, let's switch gears again and take a look at a company operating in a completely different sector.
Right.
SSR Mining.
Okay.
They're a precious metal miner primarily focused on gold production. And here's where it gets interesting.
Okay.
Their stock has actually declined despite the surge in precious metal prices in 2024.
Really?
What gives?
So unfortunately, this is a case where those external factors have really impacted a company's stock performance.
Okay.
There was a tragic heap leach pad collapse at their Kopler gold mine in Turkey.
Oh, wow.
And that led to a sharp drop in their share price.
Oh, that's awful.
It's a really heartbreaking situation.
Yeah.
And the remediation efforts are estimated to cost
Yeah.
somewhere between $250 million and $300 million,
Oh, my God.
with a recovery timeline of 2 to 3 years.
That's a massive setback.
It is.
Both financially and reputationally.
Yeah.
It makes you wonder if this incident could have been prevented
Right.
with better safety protocols in place.
It certainly raises important questions about, environmental responsibility and the long-term sustainability of mining operations.
For sure. But focusing on the company's prospects.
Yeah.
It's worth noting that SSR Mining is in a relatively strong financial position.
Okay.
They have a net cash position, which means they have more cash on hand than debt.
Right.
So this gives them the flexibility to fund those remediation efforts and continue investing in other projects without taking on additional debt.
So that's a crucial advantage.
Yeah.
In a situation like this, it gives them breathing room to address that Koppler incident
Yeah.
while continuing to operate their other mines.
Right.
And there's hope that they might regain their environmental permit for the Koppler mine if they can present a plan that addresses the concerns raised by that incident.
So while the Koppler incident has undoubtedly dealt a blow to SSR Mining,
Yeah.
they're not down for the count.
Right.
They have the financial resources to recover.
Right.
And they've taken steps to address those environmental concerns.
Right.
The question is, can they regain the trust of investors?
Yeah.
And demonstrate that they've learned from this tragic event?
That is the key question.
Yeah.
They've also made a strategic acquisition recently,
Okay.
purchasing the Cripple Creek and Victor Gold Mine from Newmont.
Okay.
And that move should boost their production capacity and potentially help offset the losses from that Koppler incident.
So a potential rebound story in the making.
We'll see.
Yeah, time will tell.
Yeah.
But their financial strength and those proactive steps to address the Koppler incident give them a fighting chance.
For sure.
Okay, let's move on to a company that's been navigating a very different kind of challenging landscape. Trulieve Cannabis.
Right.
A U.S. multi-state cannabis operator with a strong foothold in Florida's medical marijuana market.
Okay.
Cannabis stocks have faced a lot of volatility due to shifting political winds. And that failed attempt to legalize recreational marijuana in Florida. So what's the outlook for a company like Trulieve in this uncertain environment?
I mean, the cannabis industry is highly sensitive to political and regulatory changes.
Right.
And we've certainly seen that reflected in the stock prices of these cannabis companies.
Right.
However, there's a potential silver lining on the horizon.
Okay.
The DEA has this proposal to reschedule cannabis from Schedule 1 to Schedule 3.
Okay.
And this could have a major impact
Yeah.
on companies like Trulieve.
Now, that would be a huge shift.
Yeah.
Can you explain what that rescheduling would mean in practical terms for a company like Trulieve?
Sure. So under the current Schedule I classification, cannabis businesses are subject to Section 280E of the U.S. Tax Code, which prohibits them from taking standard business deductions.
Oh, wow.
So rescheduling to Schedule 3 would mean that Trulieve could actually take advantage of these normal tax deductions.
So a potential tax break could be a game changer for their bottom line.
Absolutely. It could improve their profitability significantly.
Yeah, and let's not forget their strong position in Florida's medical marijuana market, which is one of the largest in the country.
It is.
They're well positioned to benefit from any expansion of the medical marijuana program or any future move towards recreational legalization.
Absolutely. They've built a really solid foundation in a market with significant growth potential, and they've also been expanding into other states.
Okay.
So they're diversifying their revenue streams and positioning themselves as a leading player in this rapidly evolving cannabis industry.
So while the political and regulatory landscape for cannabis remains uncertain, Trulieve's strong market position, potential tax benefits from that rescheduling, and their strategic expansion efforts make them a company worth watching.
For sure.
Okay. Our final magnificent stock pick is Applied Digital, a digital infrastructure solutions company. That's making waves in the AI space.
Yeah.
But with all the hype surrounding AI, there's also that looming fear of a bubble burst. So can you shed some light on this potential risk?
Sure.
And how it might impact Applied Digital?
You know, the history of these emerging technologies is often marked by periods of irrational exuberance, followed by this painful correction. The The dot-com bubble
Yeah.
of late 1990s is a prime example.
Totally.
So, yes, there's definitely a risk that the current excitement surrounding AI could lead to a similar bubble burst scenario.
Right.
However, Applied Digital is not just an AI play.
Right.
They're a digital infrastructure provider, which puts them in a more resilient position.
Right. They're essentially like the picks and shovels of the digital gold rush.
Exactly.
They provide the data centers and the high-performance computing applications that are essential for AI development, regardless of whether that hype cycle continues or fades.
Yeah.
And they're projecting some pretty impressive revenue growth, over 50% in both 2024 and 2025.
Wow, that's ambitious.
Yeah.
But I mean, the demand for data centers and HPC is only going to increase as AI becomes more prevalent across various industries.
For sure.
And Applied Digital has this major vote of confidence from one of the biggest names in AI.
That's right.
NVIDIA.
Yeah, NVIDIA has made a significant investment in Applied Digital.
Yeah.
Acquiring a large stake in the company. And that's not just a financial investment.
Right.
That's a strategic partnership.
Exactly.
That signals NVIDIA's belief in Applied Digital's potential to be a key player in the AI infrastructure space.
I think this partnership is a win-win for both companies. Yeah. Applied Digital's data centers provide that platform for NVIDIA's GPUs, which are essential for AI training and development.
Right.
And Applied Digital itself uses NVIDIA's GPUs for its own AI cloud operations.
This really symbiotic relationship.
It is.
That could really fuel the growth of both companies.
For sure.
Now, in addition to those 7 magnificent stocks, the article also highlights 3 companies that were unlikely winners in 2024.
All right.
And might continue their upward trajectory in 2025.
Okay.
It's a really diverse group.
Yeah.
We've got Reddit, the online forum.
Okay.
Kifu, a Chinese credit tech platform.
Okay.
And Hims and Hers Health, the telehealth company.
Interesting. So these are companies that really defied expectations and delivered this strong performance in 2024.
Yeah.
Definitely worth keeping an eye on as they continue to evolve and navigate their respective markets.
So let's start with Reddit.
Okay.
They had a very successful IPO, and their stock has performed remarkably well.
Yeah.
Considering the initial concerns about their ability to monetize a community that's known for its resistance to advertising.
Yeah, it's fascinating how they've managed to strike that balance between community engagement and revenue generation.
Yeah, they've proven that even in a space as unique as Reddit, there's room for profitable growth.
There is.
I mean, they've accelerated their revenue growth.
Yeah.
And to the surprise of many analysts, they've achieved profitability.
Wow.
They're growing their user base, and they have significant potential for international monetization.
Oh, really?
Currently, half of their users are outside the U.S.
Okay.
But that segment only accounts for 17% of their ad revenue.
Wow. So that's a huge opportunity for growth.
Yeah.
If they can effectively tap into that international market.
Yeah, they'll have to navigate cultural differences, user preferences.
Right.
But if they can replicate their success in the U.S., on a global scale, I mean, their growth potential is significant.
For sure.
Okay, next up is Kifu.
All right.
A Chinese credit tech platform that connects underserved consumers and small businesses with financial institutions.
Okay.
They've been quietly operating in a massive market, and their financial performance has been consistently strong.
And what's impressive about them is that commitment to profitability and shareholder value.
Right.
I mean, they consistently generate profits, and they're committed to returning those profits to shareholders through dividends and stock buybacks.
And despite their strong stock performance, they still seem to be undervalued.
Really?
I mean, they're trading at less than 8 times their trailing earnings,
Wow.
which suggests that the market might not be fully appreciating their consistent financial performance and their growth potential in such a rapidly expanding market.
So they're a company that often flies under the radar of Western investors. But those solid fundamentals and that commitment to shareholder value makes them a compelling investment opportunity.
They're a good reminder that there are opportunities to be found outside of the well-trodden paths.
Absolutely.
Okay, last but not least, we have Hims and Hers Health, a telehealth company that's expanded beyond its initial focus on men's health services to offer a broader range of healthcare solutions, including birth control and weight loss treatments.
Got it.
they've tapped into a growing trend, haven't they?
Absolutely. They've recognized that increasing demand for convenient and accessible healthcare, particularly among younger generations who are really comfortable with those digital solutions. So that expansion beyond men's health has been a key driver of their growth.
And they've managed to achieve profitability, which is a significant milestone for any telehealth company.
It is.
They're proving that it's possible to build a sustainable business model in this space. Of course, regulatory and competitive challenges remain.
Right.
But their focus on innovation and their ability to adapt to changing market conditions suggests that they're well-positioned to overcome those challenges.
They're a company that's clearly in tune with that evolving healthcare landscape. They're addressing a real need, and they're constantly innovating to meet that need.
So we've got a mix here of high-growth companies like NIO, Cloudflare, and Applied Digital, along with those established players like Pubmatic and SSR Mining, and then these unlikely winners like Reddit Kifu and Hims and Hers Health, each with their own unique story and potential. It's a diverse and fascinating landscape, and the key takeaway here, I think, is that opportunity exists across various sectors and market caps.
Absolutely.
It's all about understanding the trends, doing your research, and making informed decisions that align with your investment goals and your risk tolerance.
Well said. And as we wrap up this part of our deep dive, let's remind you that investing is a journey, not a destination. It's about continuous learning, adapting to changing market conditions, and making those informed decisions that will help you reach your financial goals.
And remember, there's no one-size-fits-all approach to investing. What works for one person may not work for another. It's about finding the right strategy that aligns with your individual circumstances and aspirations.
Exactly. So stay curious, stay informed, and most importantly, enjoy the journey.